Hello, and welcome to this edition of Accenture's Technology Vision for Insurance 2015 podcast series. We're talking to Mark Halverson, Managing Director of Accenture Insurance, about the Internet of Me, one of the major trends to emerge from this year's Tech Vision. We're seeing devices such as sensors in the home and office, cars, wearable computers, and more, all connected to the Internet of Things. One result is that companies are able to create personalized experiences that deliver more value than ever, and that satisfy customers at a higher level. Mark, what else does this trend mean for the insurance industry?
The Internet of Things is really an interesting topic when it comes to the notion of insurance, and it opens up doors to so many different avenues for insurers and frankly others that would move into an insurance-like set of offerings. The notion of insurance actually is called into question in an Internet of Things. If we go back far enough, we'd find that the whole concept of pooling and underwriting only emerged because we didn't have enough information to price risk directly. And arguably, in an Internet of Things, we actually do have that information, and that owners of large data, big data providers can generate real-time insights that could actually truly overturn the original nature of insurance. So I think there's some really interesting opportunities and threats as it relates to the business. The other interesting thing that we find is, particularly if there is an opportunity for disruption or for other new entrants to move in, is that in most surveys we find that those who are customers of insurance companies are not so keen on those insurance companies. Insurance is not typically a positive part of people's daily lives, and insurers are not viewed as a trusted entity in many cases. So there's a lot of work to do for insurers to become a more trusted offering and to ensure that they can become the leader in this new Internet of Things. And one of the other interesting pieces of this, as we think about I'll call it the me-centric generation, so much more is focused on what they care about. Insurance is not something that people think about on a regular basis, so there's a real opportunity for insurers to be thinking about how to integrate back to this point of being a positive part of people's daily lives and not necessarily only thinking about insurance, moving from being a very passive type of role, and perhaps a negative connotation in many people's minds, to something that's very proactive and positive.
What is the business opportunity for insurers in the Internet of Me?
So the concept of the Internet of Me is a very interesting and new idea. And what it creates is an incredible opportunity from a data analytics, artificial intelligence, and simply testing that original concept of pooling and underwriting to begin to price risk directly. The Internet of Me and the Internet of Things creates so much new data, and so much of that is real-time data, that we have the opportunity through some very sophisticated technology to start to identify what those risks are, frankly, start to mitigate them before they happen, and then begin to price that risk quite directly around an Internet of Things and an Internet of Me. And that's a quite unique opportunity, and frankly, what shifts the notion of an insurer and what they do to perhaps some others who are excellent at big data. And obviously, we've already seen others like Google and those who have to some degree mastered this concept beginning to move into the insurance industry. So I think that's a very important concept. The other thing that insurers really need to take a closer look at is where the risk is being placed. And what I mean by that is, traditionally, most risk has been owned by individuals. And then there's two big trends that actually shift that. One is in an Internet of Things and even a world that drives more autonomy. I'll use the example of autonomous drive vehicles or self-driving cars. The risk shifts entirely from me as a human being who has tended to make a lot of mistakes over time, whether that's texting while I'm driving or whether it's driving while I'm tired or not having excellent vision at nighttime or when it's raining, to a device, a machine that is the autonomous drive vehicle. So that's a different pool of risk that is a significant change for insurers to be looking at, because that risk is just different and it needs to be evaluated differently, and hopefully it's actually a much lower risk that will save people's lives. The other thing that in an Internet of Me type of environment is that we're seeing a great deal of activity tied to the collaboration economy or the sharing economy. So whether we look at Uber or Airbnb as examples, the bottom line is there's a view that people will own less assets. because in an Internet of Me and a digitally optimized world, I will be able to share many of those assets much more effectively. So why would I ever buy a depreciating asset like an automobile, which will sit for 97% of its life, in my garage doing nothing, when instead I could be sharing a car, or if I knew that within 4 minutes I could have a car taking me anywhere I choose to go, there's a likelihood that I'll own less assets. So because of those shifts, there's a significant opportunity for insurers to be thinking about, what do they do next and where is that risk going, and how can they identify and be with those risk pools as they're emerging, as opposed to just losing out on some of the traditional risk pools, which are those of the individual.
Are there any examples of insurers blazing a trail in the Internet of Me?
There's been several very interesting examples about those blazing a trail around the Internet of Me and putting, I'll call it the human at the center to address a higher percentage of their needs. From a telematics perspective, there's a lot of interest in the industry about identifying much more information about how people drive, speeds, information about the vehicle itself. That's quite interesting, but tends to be very focused on the insurance industry and not the individual. There's another concept around human telematics or wearable computing, which drives very directly towards healthcare, and we think there's a great deal of additional value to people who provide that information, who believe that they'll get better healthcare because of it. Not so many people are exploring the notion of trying to reduce their insurance rates. Many are trying to think about how do they improve their daily lives and how do they interact in a way that they can reduce their risk and have a different type of lifestyle. And because of that, what we're seeing, one of my favorite examples is a couple of insurance companies actually who are looking not at the idea of a policy, but what is the true need. So in an aging society, which many mature economies are aging very rapidly, there's a notion of selling elder care policies. Clearly there's life insurance. But what a lot of firms are starting to look at, they're not selling things not about the policy, but a value proposition tied to living with dignity or tied to quality of life. And that links up to examples such as integrating vertically with elder care facilities. So it's not just the policy that you have, but I'll actually help you with a whole set of services around your life and retirement. We have talked to several firms about the concepts of employing robotics and robotic exoskeletons to help people with their mobility, because as one becomes homebound, that is the single largest impact to their quality of life and their longevity. So we're seeing some really interesting opportunities to engage in the Internet of Me, understand a set of needs in a different way, and address a higher percentage of those needs, and not just those of the policy, but those that the individual truly cares about.
And this increases the value of insurance to the customer, insurer, and even wider society?
This, to me, is a hugely important point. I think that the opportunity for insurance to step in and take on its original role for society, which is creating a safe reality for new invention and new disruption. And to me, that's one of the key roles in the insurance industry can and should play, and one that they need to reevaluate. I mean, clearly the opportunities around human telematics and healthcare and some of the others that I mentioned with robotics and aging, massive, massive opportunities to become part of the greater good and to increase, lifestyle and standard of living. So to me, that's a very important goal, because if we go back far enough in time, the horseless carriage was something that could have been viewed as very, very dangerous. Now, without the insurance industry backing that and effectively being a proxy for regulation to make it a safe reality, to bring the horseless carriage into society, it wouldn't happen. And now what we see is with the advancements in technology, whether that's artificial intelligence or robotics or neural technology or genetic engineering, nanotechnology, there's so many advancements that are coming to bear at pace. And one of the massive opportunities that insurance as an industry has is to claim back its role for society to make these inventions a safe reality. And if they can engage in a lot of these technologies and move them forward in a similar way to what we've seen in the past with the horseless carriage, there's a massive opportunity for upside for society and for insurers to play a very unique role, and perhaps the role that they've always been intended to play.
That's interesting. So what are the dangers for insurers of handling the Internet of Me poorly or ignoring the trend?
Well, one of the things that we've touched on already is the fact that with the Internet of Me, the opportunity to price risk directly based on all of this data that's being thrown off by the Internet of Me and the Internet of Things is that they may become irrelevant. And the fact that they sell a passive product today that is effectively a pooling and underwriting instrument may become less valuable to people who may be getting real-time advice about risk management and suggesting that they should be potentially changing their behavior instead of owning an insurance policy. And the other opportunity with somebody who is very sophisticated with data and analytics in the big data or even artificial intelligence space is that they can begin to price that risk in real time and create a usage-based insurance model that could actually replace what's been the traditional insurance model. So back to, if I use the example where 97% of the time my car sits in my garage, it's very strange that I should have insurance for a year. Why should I not have insurance for only when I drive? Why do I not only want to take this insurance when I'm exhibiting the risky behavior? And I think that opportunity is tremendous for insurers today if they can get their head around the big data analytics and I think also moving into artificial intelligence. But the risk is that they could be overtaken by others who do master this topic and frankly are already moving in.
Isn't privacy a major concern once insurers have access to data from people's cars, homes, their fitness monitors, and their smartphones?
To me, this is one of the key risks around the Internet of Me and the Internet of Things. And what we've seen is there's a huge push in many business models, including those big data models, towards monetizing data. Effectively, the risk that we have, and there's not so many moral and ethical bounds around this topic yet, but the insurance industry, I think, is in a strong position to help place those. The challenge we have is that those who collect data today in some way seem to believe that they have the opportunity to monetize that data. So even though the data may be about me or about my car or it's captured completely separately, other large enterprises are monetizing that data by reselling it to others. Now, clearly, that risk is coming, that regulation as well as the pushback from individuals to say, that's my data, that's private, you cannot use that in the same way, could literally change multiple business models tied to data monetization. And I think that, we're seeing a lot of firms who have jumped on that data monetization bandwagon start to reevaluate to say, maybe it's not about me reselling the data for marketing purposes, but instead, how do I use that data in a human-centric way to offer more sophisticated services to the individual or to, in a commercial sense, to the corporation? So the opportunity to use the data responsibly on behalf of the individual or corporation is actually quite powerful. And one of the things that one opportunity that emerges for the insurance industry is actually to become that trusted vault of information on behalf of the individual or the corporation. And using that vault, don't allow it to be broadly broadcast, but instead to be used in a very frugal way only on behalf of the individual. So I would argue that there's massive privacy issues and moral and ethical bounds that are already being challenged as it relates to how data is being used and monetized. I think there's an opportunity to step ahead of that risk and begin to put in place some of the, call them those moral and ethical bounds that help individuals manage an additional risk, which frankly is their privacy and identity. That to me is one of the unique opportunities that insurance can provide, because oftentimes insurance is viewed as a proxy for regulation, and I think the insurance industry can step in and help people manage this risk.
And lastly, where should insurers start if they want to become serious players in the Internet of Me?
So there's a couple of key places that insurance companies have been starting to focus to take advantage of these Internet of Me trends. One, as we've touched on in several different ways, is becoming sophisticated around the topics of big data analytics and beginning to explore artificial intelligence. The sheer amount of data that's being generated and will continue to be generated is such that it can't be managed by individuals in any specific way. So when we start thinking about underwriting departments and actuaries, that function is going to have to be enhanced dramatically through big data analytics and artificial intelligence. So that's one of the first steps that people will have to consider. The second is, what is the role of insurance? And how do I start to think about offering services that are not just about the passive policy, but about a broader set of needs? So I think that's another opportunity for insurers to start thinking about their core value proposition to their customers, recognizing, as we touched on, the brand may not be an excellent consumer brand, but how can they begin to think about embedding insurance and their capabilities into a broader set of services that meet a higher percentage of needs. That the last one that I think is quite interesting, we haven't necessarily touched on, is there's an opportunity for firms to begin to focus on a topic I'll call venture insurance. And we've seen a lot of venture capital going into these unique advancements in technology, some of which I referenced, nanotechnology, robotics, et cetera. But the opportunity for insurance companies to begin to embrace those new advancements and innovations and disruptions and embrace their societal role of making those disruptions and innovations a safe reality is a really unique opportunity to get started, and that's engaging in those technologies directly, understanding the risk, and beginning to make markets in things that are near enough as home care robotics, which we see a great deal of advancement in, and maybe as far off as some other genetic engineering or 3D printing of human organs, which is well underway in the research areas, and will have massive societal impacts, but perhaps not quite so near as it relates to practical implementation. But there's a real opportunity for this exploration to begin today.
Thanks for being here today.
Well, thanks for having me. I certainly enjoyed the discussion.
You've been listening to Mark Halverson, Managing Director of Accenture Insurance. If you'd like more information on how Accenture can help, please visit accenture.com/digital insurer.